We will start the webinar. Good morning and welcome one and all for our regular second Saturday webinar. We are getting lot of queries on Infosys buyback for the last 1 week. That is why I have put 3 slides on buyback tutorial at the end of the presentation. I hope it will be useful to you. We will start the presentation now. So the bull run continues in our market, though at index level there is not much movement in both Nifty and Sensex. Broader market is seeing lot of activity, especially in mid and small cap space. If you see, means many stocks are going up. Even yesterday, if you see, Kitex has gone up by 20%, and many stocks in the last 1 month, 2 months has virtually doubled because of various news flows, because of other reasons. But the activity in broader market continue to take place, and a lot of interest from retail investors have also started now, so which is very encouraging. But the main driver, FIIs, they are very cautious on the market. We are already first quarter is over. Till now, the net inflow is almost nil. If you take April, May, June, 3 months, means net inflow almost nil from foreign investors. They are playing cautiously, but they will come in vengeance once the dollar index falls below 90. Currently, the dollar index is slightly above 92. If dollar index fall below 90, means FII money will start coming in. One macro data which is showing very encouraging sign is the exports figure. Exports are doing exceedingly well. Exports figure are very important for any economy to pick up. And for the last 3 months, our exports has been doing very well. In fact, the first quarter of current financial year, that is April, May, June, India has done the highest ever exports figure in spite of lockdown in many states. One macro data which has been very positive and which has happened on the ground level where everyone can see is the export figure. That is very encouraging. And one concern for the market is the crude oil prices are spiking. Even when global markets fall, even when other commodity prices fall, crude oil prices are not falling. That is one concern. I have put one slide on why crude oil prices are going up, whether the uptrend will sustain for the next 1 year or 2 year in crude oil prices. I will explain to you. I hope it will be very useful to you. Let's in the presentation we can see what is the reason for crude oil prices going up. The last 1 month, that is between last second Saturday meeting and this second Saturday meeting, if you see, means Nifty and Sensex are almost flat. There is no change in the Nifty and Sensex value, almost flat. Mid cap also almost flat, slightly above what it was close to last time. And small cap index, it is 3% up. So one of the reason why mid cap index is underperforming in spite of many mid cap stocks are doing well is that Nifty mid cap index has some Adani group shares in the index. We know that in the last 1 month, Adani group shares has been doing badly because of various reasons. Some of the stocks has been put into trade to trade segment, and that led to steep fall in many stocks. And that is why if you see that Nifty mid cap index hasn't done much in the last 1 month in spite of many stocks going up. BSE small cap has done reasonably well. It is up by 3% in the last 1 month. Once again, I reiterate that we are in a bull market. Every time I'm putting one slide on the bull market, and to reiterate that we are in a bull market because most of the retail investors are very cautious and they are staying away from the market. I am putting every webinar. I am putting one slide on the bull market. And the main characteristic of the bull market is that most of the stocks will participate in the bull run. And even if you see now that initially large cap stocks went up, then mid cap went up. Now small cap and micro caps are going up very sharply in the last 2-3 weeks. And at the end of the bull market, if you see, means most of the stocks will participate in the bull market. and we are seeing that we are seeing that many stocks are going up. And even if you haven't done the portfolio in the last 1 year, the portfolio value would have gone up because almost all stocks has participated. Maybe here and there one or two stocks would not have participated, like ITC, which hasn't done anything in this bull market. Like that, there will be very few exceptions, uh, stocks which won't participate in the bull market. And other than that, if you see that majority of stocks will participate, and that's what we are seeing now. And whenever a bull rally starts after a bear market, means initially the rally will look irrational. It looks that some manipulation is happening on stocks. That is why market is going up, and it is a dead cat bounce. Like that, initially it will look, but as time goes on, we could start seeing the positive data on the ground level. Generally market used to discount the future. So what is going to happen after 1 year or 1.5 years, market used to discount uh, immediately now. That is why that for a ordinary investor, or for a majority of us, that uh, we don't know why the stock prices are going up without any reason. But after 6 months or 1 year, the actual positive news will start flowing in. By the time actual positive news come, most of that would have already been discounted by the market. Stock prices would have rallied. And if you see the positive news and then buy, means most of the rally would have been over. Even now, if you see that stock prices are going up for the last almost 1 year now, and if you see that now the exposed data started showing up. And in the future, if you see, means that corporate results also will start looking good. Already steel companies and all reporting very good results. So the initial rally will look irrational, and it will be like a momentum movement. But as the time passes, you can see that the positive data actually start happening on the ground level. And another thing you have to remember, that bull market always have pocket of excesses. Pocket of excesses means there will be manipulation in many stocks, and we have to be careful. We should not get dragged by the sharp up move. So we have to be careful in that. Many stocks will go because of manipulation also. We have to either we should buy the stock only for trading purpose. Otherwise, better to stay away from these stocks. So how to identify whether segregate between whether the stock price is going up based on manipulation or based on fundamentals, means exactly on 100% basis no one could able to filter it. But at least based on experience and based on common sense, we could be able to filter a majority of the stocks by identifying that this stock is going based on the speculation. So based on experience, we should segregate uh, the good stock and bad stock. And another important thing is that all bull markets, the corrections are integral part of all integral part. That means in every bull market, we will see sharp correction in between bull markets. Generally, the correction will be very sharp, but it will be swift. Immediately, the stock price will bounce back post the correction. And during when correction comes, um, many people will threaten that the bull market has ended, so we have to sell all the shares, like that. The correction will be look like that, but it will be normal bull market correction, and then it will bounce back. And missing bull market will be a costly mistake for the most investors. Yeah, I will give one example. Generally, this bull market will give capital for majority of them. For example, suppose if you are starting with an investment of 10 lakh in a bear market, when the time by the time when bull market is at the peak, means your 10 lakhs would have become 50 lakhs. And then the bull market will end and bear market will come. And by the time the bottom of the bear market, uh, from 50 lakhs, it would have fallen to 25 lakhs or 30 lakhs. That means your initial 10 lakh capital would have become 30 lakhs on the mid of the bear market. So your range has changed from 10 lakhs to 30 lakhs, and that will be the base for the next bull market. So for creating wealth, you should mandatorily participate in the bull market, and missing bull market will be a costly mistake for them. If you miss the bull market, means then you could not able to create wealth, or and you could not able to participate for the next moment also. So investors should believe the should see that they should not miss the bull market. If you are cautious means you can increase the cash level, but missing bull market completely will be a costly mistake. And this is the chart which I have taken from the Morgan Stanley presentation, and they have plotted India's bull market in Indian markets. They have plotted almost 6 bull markets we have seen in the last 30 years. And I'm surprised that they have missed one chart, which is the 2013 to 17 bull market chart. They have missed it. Other than that, they have covered almost all bull markets in our Indian market. And if you see that between 2003 to 7, 3 to 8, that is that is the biggest bull market we have seen our history in our history till now. And if you see that index went up by almost 7 times from the low, and now not only index has gone up from 7 times, it is the lengthiest bull market we have seen in our Indian history. Almost 4 years the bull market continued, and many stocks went up by almost 100 times, 150 times in the matter of 4 years. United Spirits went up by 100 times. Companies like Praj Industries went up multiple times during that period. Jindal Steel and Power went up by multiple times during that period. You can keep on telling the number of stocks went up by 50 times, 100 times during this 2003 to 8 period. And if you see that during that period, many mid-cap funds, Birla Mid-Cap Fund, Aditya Birla Mid-Cap Fund, and other funds like that, they gave huge return to their investors during that time. So somebody who have invested between 2003 to 8 means they have made huge money. And what is interesting to see in that rally, 2003 to 8 rally, is that the index went up by 7 times, but in between the bull market, there has been some sharp correction. Some corrections were even 30% sharper during that period. If you see that in the light green, this is the correction which we had in the bull market. This is a bull market correction. It fell by 30% during that time. Again, it went up. And if you see that in between, there has been some sharp corrections during the bull market rally. So bull market rally will always have corrections, and it will be very sharp. The correction will be very sharp, and it will be very swift. That means swift means very short period the correction will be there, and immediately it will bounce back. The other rally we have seen in our market is the 91-92. It is the sharpest of all bull market we have seen. In a short period of time, index went up by almost 4 times. That means in the x-axis we can see the number of weeks bull market was there, and the y-axis is the percentage went up. Almost in 1 year, 55 weeks, if you see that index went up by almost 4 times during that period. And it was the sharpest bull market we have seen in our Indian history. Index went up by 4 times in 1 year period. The other bull runs and all almost normal only. In 2009 and 10, after this 2008 fell very sharply, we had one bull run where the index doubled, and it was around 80 to 90 weeks the bull market happened. It was mostly an pullback rally bull market. Similarly, in 93-94, after this 91-92 fell very sharply, rally collapsed, we had one rally in 93-94 where the index got doubled, and it was also around a 1 year period the rally has happened, 93-94. So 93-94 and 2009 and 10 is basically a pullback rally we have seen. The current one, what we are seeing is the dark navy blue chart web plot, where you can see that it is near to slightly longer than a 1 year period, but the returns are just 100% only. So what we are seeing is a normal bull market. We haven't seen a huge bull market till now. It's a normal bull market when compared to the bull market we have seen, and my personal feeling is that it has more legs to go up, but in between some corrections will be there. But if you want to write the profit, means we have to face some pain, and in the current bull run, I am expecting it has more legs to go. And 93, 94, if you see the post 91, 92, we had one bull market. It is mainly due to foreign investors allowed to invest in India at that time. That is why this bull market happened. Initially, when they are allowed to invest in Indian market, they started buying many index shares. And that is the reason why we have seen 93, 94 bull market. Any correction in our market is mostly it will be led by global market correction. That is what our take is. Indian market alone cannot fall, but any correction happens in the global market. For example, Dow falls by 20% or 15% miss. Naturally, our market also will participate in the correction, and we will also fall. We alone will not fall. Well, why when world market fall we fall means this is the data I am putting onto you. And if you see the free float ownership of the NSE 500 shares, free float ownership means the shares held by non-promoters. For example, suppose if a company is there, 100% is the total shareholding, promoters are owning 50% means the balance 50% is called the free float ownership. And in that 50%, FIs are owning, if you see, almost 47.9% they are owning it. So whatever free float available in Indian market, in NSE 500, top NSE 500 shares, if you see means almost half of it is owned by the foreign investors. So when foreign investors will sell, generally when there is a world market correction, global market correction, they will sell in Indian market also. That is why they play a important role. Whenever a global market correction happens, means they will sell in India also, and India will also participate in the global market correction. That is the reason why we believe that when global correction comes, we will also fall. And if you see the free float percentage hold in free float, if you see that mutual fund holds around 13.8. Actually, 13, 14 years back, it was far less. It was just 8.5% only. Then banks, finance institutions, and insurance almost stagnant in the last 14 years. If you see, means around 11.11, 12, it is there. FII ownership, it has gradually increased from 43 to 48 levels. And non-promoter shareholding, it has a non-promoter corporate has come down. And retail portion, if you see, means actually it has come down when compared to 14 years back. Retailers were holding around 21% during that period in the free float. Now it has come to 14.2, and others around 7%. So the main driver ownership held by by is foreign investors, where they almost were holding half of the free float shares. That is why whenever a global market correction, we may also correct. Previously, when foreign investors sell, we don't have the counterparty to buy. Right now, mutual fund are playing a major role. They are getting a lot of money from our investor, and they will give some support. Previously, in 2011, 12, when FII sell, there were nobody to buy it. So the fall will be very sharp. Now, at least we have got a counterparty to buy it. That is domestic mutual funds. They will buy. Also, the direct retail investor category also, the base has expanded very rapidly in the last 1 year, and they will also give some support to the market when FII starts selling. One of the important characteristic of the bull market is the IPO market generally will become very hot whenever a bull market comes. That usually happens in all bull markets, not only in India, globally it used to happen, because only during the bull market only market will have appetite to absorb all the IPOs. So moreover, you will get higher valuations during the bull market while doing IPO. And now this year also we are expecting a lot of IPOs to happen, and many IPOs are lined up to hit the market. And this week, two small IPOs got closed. One is the clean energy, the other one is an GP infra. Both got subscribed around 100 times. And next week we are going to see a very important IPO, which is the Zomato IPO, where many retail investors are very eager to participate into it, because it has become an integral part of the life, where many of them used to order through the Zomato platform. And the IPO is scheduled between July 14th and 16th. and we are expecting very good response for this IPO. Even though Zomato is a loss-making company, and if you see the last 2 years, last year they have shown huge losses. This year their loss has reduced it, and it is scheduled between 14 to 16, and we are expecting good response to this IPO. And it's a first of its kind of IPO, because the Zomato, it's a platform-based business, and where people used to order from the platform from home, and Zomato will get some commission because of that. It's a platform-based company, and we are expecting good response to this IPO. It is a 9,500 crore and IPO, and a positive point about this IPO is that most of the money will go to the company only. Right now, what is happening in most of the IPOs are that either a private equity player will be selling the shares, or promoters will be selling the shares, and whatever IPO money is collected, most of the money will go to the selling shareholder. It won't go to the company. Whereas in Zomato case, Zomato will be getting more than 95% of the money, almost 9,000 crores they will be getting it. That means even if they make losses for the next 3 4 years, they have money, they will have cash to burn it, and they have money to do acquisition also. And that is one positive point about the Zomato IPO when compared to other IPOs which are happening in the recent time. The important IPO, which is the LIC IPO, which is the mother of all IPOs, and government is working very hard to make it to happen in the current financial year itself, FY22 itself. It is likely to come, and the size of the IPO is expected to be around 1 lakh crore. Till now, we haven't seen that much biggest IPO in our Indian market, but LIC is likely to have an IPO of around 1 lakh crore, and it is likely to happen in the current financial year. My personal belief is that by the time LIC IPO comes, market used to be at a very high point, and post IPO of LIC, we may see some correction. That is my own intuition and personal belief. And LIC IPO is likely to get very good response from the from both the domestic investors as well as from foreign investors. One of the positive about LIC is that the persistency ratio is very high. We know that many private insurance companies are there, but still most of them don't have hope that they will settle the claim money once a person dies. Means they still have hope on LIC that LIC will probably settle the claim money. So that brand image LIC have. Generally in this bull market we used to see a lot of new sectors getting listed in the last 4 years. If you see, means that many insurance companies got listed. It is a new sector, and the companies like HDFC Life, SBI Life, ICICI Prudential, they got listed. And recently this Zomato IPO is coming. It's a platform based business. It is also one of its kind of business which we don't have an existing listed player. When during a bull market, we used to see a lot of new sectors used to get listed, and it always attract institutions. Whenever a new sector gets listed, means for comparative study, we don't have an existing player. A new sector usually comes at a very high valuation, and institutions used to subscribe to that. And new sector used to get trade at a premium valuation. And one of the positive about the new sectors getting listed is that it give more choice to investors, and more investors will come into the market, and market depth will go up. That is one big positive whenever a new sector gets listed. And as I told in the beginning, if you see that the export figure, this is the export figure which I have plotted. And if you see that for the last 3 months, consecutive months, the exports has been well above $30 billion. If you see from March onwards, March, April, May, June, 4 months, it has been well above $30 billion. And it's one of the good indicators of how economy is doing, and it's a big tailwind to our economy. In fact, in the first quarter of current financial year, the total of around 95 billion is the highest ever single quarter exports we have done from India, and this export figure is a mercantile export figure. Every month around 10th, previously around 10th, this data used to come because of exports doing well. Government, in order to motivate people, they are releasing around the second or third of every month itself. Since the data is positive, they are releasing very early, and this is the mercantile exports. These exports involve goods like pharmaceuticals, engineering, uh, then agri products like that. So the IT sector won't come into this. It will come under services sector. It will come under. This is the mercantile exports, and it is doing very well. And exports are big tailwind to the economy. I will put the next slide. You can see that in 2003 to 7, our economy did very well. One of the reason why our economy did very well was that between 2003 to 7 period, our percent it jumped. If you see that between 2003 to 9, from 5 billion exports every month, it jumped to almost 18 billion. It went to in 2009. Nearly 3.5 times our exports went up during this 6-year period. And between 2003 to 7, it did very well. From 5 billion, it went to 15, nearly to 200% jump it has happened. And our economy also did very well. At that time, we were growing around 9%, 10% GDP, mainly because exports were doing well. Whenever an exports does well, means it's a big tailwind for an economy. Not only India, for any economy, exports are big tailwinds, and for India, it's particularly a big tailwind because we have a strong domestic market, and exports does well means then economy will be firing on both cylinders, and it will do very well. GDP growth will go up very sharply. Right now, the exports are showing strong growth, and we hope that once these COVID cases are getting over, the domestic economy also will start doing well. The other important positive news which I am seeing every day is that lot of companies are seeing rating upgrades. Some of them who are in the market, if you see, switch on the TV, CNBC TV or Bloomberg TV at 8 o'clock, if you see means, definitely you could be able to see 2 or 3 company rating upgrades flashing in that. Yesterday, I saw that Tata Steel rating was upgraded by CARE Rating Agency. And 2 to 3 days back, I saw that JK Lakshmi company was has seen rating upgrade. So every day you can see 2 or 3 company rating getting upgrades. This is just a contrast to what was happened previously, where the rating downgrades used to be much higher than upgrades. Right now, what is happening is that rating upgrade is much higher than uh, downgrades now. Right now, very rare to see rating downgrade, but rating upgrade is happening on a daily basis. So when rating upgrade will happen, whenever there is balance sheet strength is there, and the ability of companies to pay back the debt they have taken or the debt they are going to take, means a rating agency will give a rating upgrade. That means the balance sheet strength has increased tremendously for Indian corporates, and that has been get reflected from the rating upgrades. If we see majority of the companies in the index, if you see means, except Tata Motors, yeah, all companies are looking very strong. Previously, Tata Steel was under pressure because of very high debt. Now that also have corrected. Now they have reduced debt by almost 30,000 crores in the last financial year. Now the debt level has become manageable. Only Tata Motor is having very high debt in the index companies. If you see the non-index company, if you see, some of the Adani Group companies are having very high debt level, and Vodafone Idea is having very high debt level. So if you keep aside Adani Group company and Vodafone Idea, I don't see any pressure coming to the corporate lending banks, because most of the corporates have cleaned up their balance sheet, and there is the possibility of corporate banks losing money from the corporate loan is very less now. That is one of the reason why we are very bullish on the corporate banks. Three corporate banks are there: SBI, ICICI Bank, and Axis Bank. These three are the major corporate lending banks, and we are very positive on the three banks, mainly because the default from corporate from here on will be very less. On monsoon update, monsoon started very strongly. At 2 weeks back, at one point of time, it was around 41% above long term period average. But post that, monsoon got a break for almost 2 weeks. But now it has again started. Today also at Thiruvananthapuram, we got very good rainfall, and the weather is very pleasant now. And throughout South India, it is expected to see good rainfall for the next 3-4 days, and most part of the country also to see good rainfall in the coming next week, as per the IMD forecast. So, as on yesterday, if you see that country has a fall from 41% positive, it has become -5 departure from the long period average, mainly because for the last 2 weeks we had a break monsoon, which led to a sharp rainfall, lower rainfall in our country. Now, yesterday onwards, rainfall activity has started picking up, and we expect some of the deficiency will get corrected in coming days. And monsoon revival is imminent, and it has already started now. And IMD has forecasted normal monsoon, and they expect that monsoon and the shortfall which has happened because of lull in the last 2 weeks is likely to get corrected in the coming weeks. Coming to COVID, fortunately, the number of cases in India has come down very sharply. Most of the states, they have controlled the COVID, except two states, that is Kerala and Maharashtra. Everywhere the cases has been under control. Uh, Whether we have third wave or fourth wave, that anybody's guess. No one knows whether the third wave will come or fourth wave will come, because in UK it is expected that it was almost fully vaccinated, but the number of cases have started going up. So we don't know how the third wave and fourth wave will pan out. It anybody's guess. Let's hope for the best that it won't have much impact. What I am surprised is that in Kerala the cases are not coming down, in spite of so many people got vaccinated. Highest percentage vaccinated in our country. People are using double mask. Still the cases are not coming down. Eh, when you compare to the population Kerala has, the cases contributed to overall national cases are extremely high. So there is something more than what we think. Maybe due to the climatic conditions of the state, or because of some other reasons beyond our control, this COVID is panning out. And let's hope that that even if third wave comes, we will not have much impact. Vaccination is going on the other hand. Cases, it fell very sharply. Now then again, it is coming up. Now the cases are coming up in the vaccinated countries like UK, Israel, and Russia, where the cases have started going up in spite of vaccinated. One positive thing about that, in spite of cases going up, number of people hospitalized and number of people dying has come down very sharply for the same number of cases they witnessed a few months back, mainly because of vaccination. It has a vaccination, the hospitalization ratio has come down, as well as the death ratio also has come down. Crude oil prices is a very important as far as India is concerned, because we import almost 80% of crude oil. Now we are seeing that petrol prices have crossed 100 rupees in most of the states, and people are suffering because of very high crude oil prices. And one of the reason why the petrol prices are very high is that it's a highly taxed commodity in our country, where two-thirds of the prices are taken as taxes from both the central and state governments. And it is affecting right now, since lockdown was there in most of the states. We majority of them are not making any travel, but once the travel starts, and means it will affect a majority of the people. and the price of crude oil is not coming down. Actually, day before yesterday, I took this chart. It was 72, and today morning I saw that it has again come to 75 level. Mainly because the crude oil inventory in US has come down. Even when other commodity prices fall, these crude oil prices are not falling. And if you see that in 2013, 14 and all, crude oil prices were around $110. When you compare with that, still it is lower. Commodities like steel, copper and all has gone to all-time higher, whereas crude oil prices still it has been lower. Still it is lower by 40% when compared to 2010-11 levels. But affordability, it's a big problem for a country like India because it is a highly taxed product. So why the crude oil prices are going up? I will show in the next chart. So this is the crude oil production and consumption chart. This has been taken from IEA website, and if you see that this blue color, light blue color is the production chart, and the dark brown color is the consumption chart. So generally, production and consumption used to be will be going in line, and if you see that between 2016 and 19, when COVID started affecting, before that crude oil production and consumption was almost at the same level. At one point of time, it was lower, then it went up, but both were going as in tandem. But when COVID started hitting, the consumption globally there was lockdown. The consumption fell very sharply. So during that time, only the crude oil prices collapsed from 70, $80 to very sharply to the even at one point of time it traded negative in some of the oil exchanges, commodity exchanges, because the consumption dried at that time, and crude oil prices fell very sharply. Because of the consumption falling sharply, many countries which were producing crude oil, mainly these OPEC countries, they reduced production very sharply. If you see that the consumption fell very sharply, then in line with the falling consumption, they reduced the production also. But post lockdown, the V-shaped recovery was there in consumption. Crude oil consumption fell, then they had the recovery. Whereas the Gulf countries, they did not increase the production. Whereas some other countries like US and all, they increased the production. But still, if you see now in this chart, the consumption is more, whereas the production is less. So there is a big gap between consumption and production. So what will happen is that whenever the production is less than the consumption, means people will start using from their inventory. They will start using. Even day before yesterday, the US announced the crude oil inventories, and if you see that there was a single largest drawdown in the inventory. That means the biggest drop in crude oil inventory was there in US 2 days back. Mainly the reason was that the crude oil consumption is higher than what it was producing. And the IEA forecasted that after next year onwards, that is in 2022 onwards, both production will go up as well as the consumption, both will move in line with tandem like what we have seen in 2016-17. So what we are expecting is that OPEC will increase the production. That there has been some discussion is going on between OPEC countries. Saudi Arabia don't want to increase the production, whereas countries like UAE and other countries, they want to increase the production, and that fight is going on. We expect that the fight will come soon, for fight to end soon. And once that happen, if OPEC increases, means the production will go up. The other important supply which may come this year end or next year is the Iran oil. Right now, Iran is under sanction from US, where they could not be able to export their crude oil. But now talks are going on, and if suppose US removes the Iran from sanction, means then Iran oil will start hitting the market. Generally, a country which has been exported for the last 2 3 years, means they will be allowed to export more oil into the market. So crude oil, then Iran will export more, and the market will become more balanced. So the production and consumption will become almost the same by the end of the current calendar year or by next year. So what we expect is that the crude oil price rise will be temporary. Maybe it may go for another 1 quarter. By fourth quarter of current calendar year, the crude oil prices may start falling by possibly by Iran oil supplies as well as by increase in production by the OPEC countries. Till then, as a consumer, we have to bear the burden. US bond yield, if you see that it has come down very sharply in the last 3 days. 3 days back, it fell very sharply. And if you see that US market also corrected day before yesterday, and our market also corrected, that is because US bond yield fell very sharply. Where bond yield is one of the biggest indicator of two things it will indicate. One is how the inflation will pan out, it will indicate. The second is what will be the growth in the economy, it will indicate. Many of them may be remembering that 4 months back in the month of March, we had corrections in our market, mainly because that at that time the bond yield was going up. So at that time, what it was felt was that higher bond yield is reflecting that inflation will go up. That is what bond yield was indicating. It was felt that means if inflation goes up means US Fed will increase rate. Now, why the bond yield at fell? The reason given is that the growth may not come as expected because of many commodity prices going up and oil prices going up, and COVID third wave started hitting many countries. That is the reason given for the bond yield coming down. But yesterday onwards, again bond yield started moving up. Now it is around 1.35 bond yield, US 10-year bond yield. And if you see that yesterday Dow Jones went up after bond market started cooling, and stabilization we have seen in the bond market. We expect our market also to do well on Monday because of the stable US bond market and the stock market. GST collection, if you see that it has come down after many months of above 1 lakh, if you see that it has come below 1 lakh, one of the reason why it has come below 1 lakh is that in the month of May, there has been lockdown in many states, including states like Tamil Nadu, Maharashtra, Karnataka, where they contribute more GST to the more GST. Because of complete lockdown, there has been some lull in the collection of GST. But now most of the economy got opened up, and we expect next figure will be more than 1 lakh. And if you see that the May figure generally you will get released in the month of July first week. 1 month lag is a 1 month lag figure what government used to release it. So the month of May collection will be released in the July first. It get released. Month of June figure will be released by August. Foreign flows, I already explained that in the current financial year we haven't got any inflow till now. More than 3 months has passed, and this is still July 8th. April, May, June, and almost 100 days it has come. Nil inflow from the foreign institutions, mainly because dollar index has been very strong, and once the dollar index gets cooled below 90 means then the foreign flows will start coming in. Mutual funds, some flows they are getting it. Last figure we got it was less than 6,000 crores, around 5,900 crores inflow we have got it. Previous month was very strong. Anyway, mutual funds are getting decent flows for the last 4 months when compared to previously, where there has been the sharp redemption was there. On summing up, our take on the market is that if you see in the near term, large caps are still reasonably valued with favorable risk reward. Some of the corporate banks like SBI, ICICI Bank, Axis Bank, still one can take at current price, and IT companies, even though TCS posted slightly below expected result, IT top rung IT companies one can buy at current level, can add to the portfolio, where the risk reward is still very favorable at current point. On mid and small cap space, where the stock has gone up by 100%, 150% the last 1 month or 2 months, we are little cautious, and we will one should buy only after seeing the quarterly results and the commentary from the management. Because any disappointment in some of the companies means you can easily see 20-30% correction in the stocks which has gone up very sharply without any news. So one should be cautious on the mid and small cap space in the near term, whereas for long term they are still bullish, but in the near term one should be very cautious. Is some of the Adani stocks, if you remember that 2 months back it went up very sharply, and if you see in the last 1 month many of the stocks has corrected by 30-40%. Adani Total Gas, the high was around 1600, it went 2 days back when I checked it was trading below 900. Almost 40% correction it has happened in that stock in the matter of 1 month. So the stocks which has been going up very rapidly, one should take a cautious call in that, unless you are very confident in the fundamentals improving, or some other reasons are there, you should take it. Without any reason some of the stocks will be going up. In that, better you can wait for the result and see the management commentary, and then you can take position in this mid and small cap space. Large cap, still most of the stocks are very attractive at current level, and one can safely take even at current prices. Now, about buyback, I have put in some 3 slides, because we are getting a lot of phone calls, especially from because of Infosys. Many calls we are getting, and I will explain what is in by buyback, uh, and what should we do when a company announces buyback. A company do buyback actually before 2000, before 1990 buyback was not allowed in India. Only during Vajpayee period, in 1998, I think I remember, if I am correct, that buybacks were allowed in India. Before that, company cannot buy back their own shares. But whereas in US and all, buyback is there for for many years. Whereas in India, buyback was allowed during the Vajpayee government. They allowed companies to buy back their own shares. So buyback, why a company do buyback? See, company makes profit every year, and they give a part of it as a dividend, and part of it is used as an for a capex, or for corporate expansion, and balance, if they have some debt means they may reduce the debt. Suppose if they don't have any debt means the cash will keep on accumulating, and the company will be holding huge cashes. So the problem holding huge cashes, what will happen is that it will reduce the return ratios of the company. For example, a company, a, a well-run company will have a return on equity of 20%. That means whatever they have invested, every year they will be making 20% profit on the capital. If they have cash means, what they will do, they will put in a bank or some debt mutual funds, but the return will be only 6% or 7%. So the core business will be making 20% return, whereas the cash they are holding will be having only 6% return. After tax, it will be just 4%. So the business will be making 20% profit, whereas the cash they are holding will be 4%. So the more cash you hold, what it will do? It will reduce the return on equity. Less return of equity means the valuations of the company will come down. So that is one reason why company do buyback. They have free cash means that will be can be deployed for buying back their own shares, which will improve the return ratio. The other thing is that suppose a stock price is, if a management feels that the stock price is trading at a very low rate, much lower than the intrinsic value, means they take that opportunity, they buy back the shares, thereby they feel that the intrinsic value may improve. For that, they may do buyback. So basically, for 3 reasons, they will do buyback: for deploying free cash flows, and for improving the return ratios, and for supporting stock prices. As per regulation, a company can do buyback by 2 methods. One is by the tender method, and other is by the stock exchange buyback. Many of them may be remembering that TCS came with buyback last year. That is, they came as a tender buyback. Whereas now what Infosys is doing is that they are doing through a stock exchange buyback. I will explain what is the difference between the two buybacks, tender buyback or stock exchange and stock exchange buyback. A company can do buyback either by tender method or by the stock exchange buyback method. In tender buyback, price is fixed. For example, a company comes with buyback in a tender buyback means they may announce that buyback price is at 500 rupees. Recently, Dhanuka Agri came with a buyback. It was a tender buyback. That means the buyback price is fixed at I don't remember the price. It is around 850 or 900 in that range. The price is fixed. The tender buyback, and promoters have choice to participate in the tender buyback. Promoters can either participate it in the buyback or they can avoid in the buyback also. But they have the choice either to participate or not to participate in the tender buyback. And investors, we small investors, has to voluntarily tender the shares in the buyback. And if we are interested to tender the shares in the buyback, we have to tender it by contacting the DP department that I want to participate in the buyback. Please tender my shares. We have to tell, and acceptance ratio on the buyback will depend upon the overall shares tendered. Suppose if there are 10,000 investors in a company and a company comes for buyback means maybe 2,000 investors may be interested in the buyback, balance 8,000 investors may not be interested in the buyback and they won't tender the shares. So the overall shares tendered will be lower. That means the shares investors who tendered the shares, the acceptance ratio will go up. In spite of they would have got that the initial acceptance ratio will be 3 or 4%, whereas the final acceptance ratio will be 20-30%, mainly because the other investors would not have tendered the share. So the acceptance ratio will depend upon the overall shares tendered. So in tender buyback, the price is fixed. Promoters have choice to participate whether to tender the promoter share or not, and investors also have choice. They can tender or they may not tender it. The acceptance ratio will depend upon the overall shares tendered. So the last year when TCS came, they opted this method, the tender buyback method, and promoters of TCS, that is Tata Sons, they participated in the buyback. Since Tata Sons owns 72% of the shares in the TCS, they participated fully and they got majority of the buyback amount. And one important thing about this tender buyback is that, as per buyback regulations, 50% of the buyback money is fixed for the small investors. That means those who are holding less than 2 lakhs worth of shares, they are categorized as small investors. A company coming up with a buyback of 100 crores means 15%. That is 15 crores worth of money will be given only for small investors. So the percentage acceptance for small investors generally higher than institutional investors because of the regulations of 15% reservation for of buyback money for the small investors. In market buyback, that is what now Infosys is doing. They buy back shares from the open market up to a maximum limit price. Infosys told that they are going to buy back for 9,500 crores worth of worth 9,500 crores worth. They are going to buy back it. The highest price they have mentioned is the 1,750 rupees per share. That that means that up to maximum 1,750 rupees they will buy shares from the market. Right now Infosys is trading around 1,560. They will buy it. Suppose the next week the Infosys is coming out with the results, and if the result is very good, and for some reason if price goes above 1,750 means they won't buy shares from the market and they will wait for the price to fall below 1,750. They will wait it, and once the price falls below 750 means they will buy shares from the market. So if you see in the last 10-15 days, Infosys is daily doing buyback. Daily they are buying around 10 lakh Infosys shares from the market. Majority they are buying from NSE, and some shares also they are buying from the BSE, and they will buy from the market till the price goes to 1,750. And if price goes above 1,050 means they will stop the buyback, and they will buy it once the price falls below 1750. So in the market buyback, we cannot tender shares. And if somebody wants to sell, means they have to sell it in the market like any other share. Buyer will be either an institution or a retail investor. Company also will may be a buyer, because they also will be placing orders everyone. And if they get the shares, means then that shares will come under the buyback. And one important difference between tender buyback and market buyback is that promoters cannot participate in the market buyback. Only the non-promoter category can participate in the market buyback, and they will sell the shares like a normal selling share. And the positive about the market buyback is that it gives support to the stock price. Suppose for some instance, if results are very bad for Infosys next week, means price will very sharply, and by that time the buyback will give some support to the stock price, because they will be buying from the market. And daily, if you buy for 10 lakh shares, means the sharp fall will be temporary, because of buyback coming, it will give support to the stock price. Once the buyback ends, what will happen is that in both tender and market buyback, what will happen is that bought back shares will get extinguished. For example, suppose a company is having the 10 crore worth of issued shares, and they bought back 1 crore shares either through tender buyback or through market buyback, means that 1 crore shares will get extinguished, and post buyback company will be having 9 crore shares only. So the equity capital will come down to the proportionately. And if equity capital get reduced, means what used to happen is that EPS will go up. So that is what buyback is. And since only in case of tender buyback, you have to contact the DP department to tender the shares. Whereas in market buyback, the price they are mentioning is the highest price. There is no compulsion for the company to do market buyback at the highest price they are mentioning. It is just the ceiling price beyond which they won't do buyback. Hope this would have given some clarification to you. So whenever a company announces buyback, you see whether they are doing tender buyback or market buyback, and then you take action based on that. And events to watch: the Q1 results already started coming in. TCS results came day before yesterday, and next week we are going to have an Infosys result on 14th, and 15th Wipro is going to announce the results. So result season will start, and you watch the results. Monsoon have started picking up. We have to see how it goes up. And the other thing is the COVID, how it situations pan out in states, that we have to see. Now we will go to our recommendations. So this time, these 5 stocks we are recommending. The first one is the Axis Bank. We are very positive on the corporate banks. I have mentioned why we are positive, because most of the NPA has been written off. From here on, we expect that the provisions these corporate banks are providing in every quarter on their profit and loss account, we are going to come down very substantially in coming quarters. And if you see that recently in the 2 weeks back, this McDowell NPA, Kingfisher NPA is also likely to be returned back, because of selling of the United Breweries shares by the debt recovery tribunal, and McDowell shares has been sold. So some of the banks like SBI and all will return back the already provided NPA. That means overall provisions will come down. Basically, we are very positive on SBA, ICICI, and Axis Bank. In SBI and ICICI, we have recommended many times. That is why I have included the Axis Bank into it. One can hold with 2 years view can hold. The near-term target is 840. The next company we are recommending is the JB Chemical and Pharmaceutical. Previously also we have recommended many times these shares, and recently if you see that results has been good, and if you see that it is now owned by a private equity player, and top management, if you see that they have completely changed the management. Now the top management is from the some of the heavy top heads from the Cipla. They have resigned from Cipla and they have joined into the JB Chemical and Pharma, and they are doing a very good job. and the company is likely to show 15 to 20% growth consecutively for the next few years, and we expect the stock price to do well also. Some of the products are doing very well, and we expect the stock, some of the branded products I'm telling is doing very well, and we expect the stock price to do well. Initially, we recommended around 1,000 rupees. It has gone down around 1,800 now. From here on, it won't be a doubler, but it will be a decent compounder for next 2 years, 3 years like that. The third share we are recommending is the care rating, which we have given in our conviction idea also. It basically rating, it's a rating company. Only 4 rating companies are there in India. Most of them are MNC subsidiaries. CRISIL, ICRA, and India Rating. These three are MNC subsidiary, where CRISIL is owned by S&P, ICRA is owned by Moody's. The CARE Rating is the only company which is a domestic driven company. In that, they don't have any promoters. It is a professionally managed company. They got some issues 3 years back during the ILFS time. Now they have changed the top management completely. A new CEO is in place. He's doing a very good job, and the company is recovering from the old bad image, and they are doing a good work now. We expect that once the economy start picking, means the rating business tend to do well, and it's a zero debt company. Company used to give good dividends also. That is why we are recommending this company. It went up to 1,900 during 2016-17 period. Even now, the stock is trading more than 60% lower from the previous peak. Attractively valued now, the risk reward is very much favorable in the favorable reward side, and one can buy it. The sugar stocks are doing very well. Awadh Sugar, if you keep aside top run companies like Balrampur Zini, Tampur, Triveni, and Dalmia, if you keep aside, means on the second run, we are positive on the Awadh Sugar, reasonably valued when compared to other sugars like Uttam Sugar and Magad Sugar. That's why we have recommended. The fifth one we have recommended is Marks and Pharma, and recently one news came that one PE player is going to invest in this company. Marks and Pharma had a huge problem during 2010-11. Actually, this company is owned by the brother of Glenmark Pharma. They are the owner of this Marks and Pharma. If you see the name, you can see that Markson. His name, the owner name is Mark, whereas in Glenmark case, the owner name is Glen. That is why they split the company into Glenmark and Markson. One brother is looking after Glenmark, the other one is looking after Markson, Mark Saldana. The other one is the Glenn Saldana, the owner of Glenmark. Now, Markson, they undergone a huge problem in 2011-12. Now they have come out of it. Company is a zero debt company. Basically, they are raising money for a capital expansion to put it backward integration of some API products. They are raising money from the PE player. And company can do reasonably well, since many retail investors are interested on low value stocks less than 100 rupees. We have given this Marsan Pharma as a recommendation. The last time we have recommended some stocks did not well as expected. One reason why this Rallies India, I thought that it will do well in the current season, but we have very conviction on Rallies India. It is a Tata Chemical subsidiary company. Still, I am expecting the price will go up by 40-50% from current level. Right now, what is happening is that many stocks, some news will come immediately. Stock will go up by 50-60% in a matter of few weeks. I expect Rallies India also will mimic the same. Right now, the stock is on sideways. Those who have bought based on our recommendation can continue to hold on their Rallies India. Company is doing a huge expansion for the next 2-3 years, and stock is available at a reasonable valuation. One can safely hold the Rallies India. The other stock which did as expected was the Lupin. One of the reason why it did not did badly is the one of the US plant. So in Somerset, it's a small plant. but still they got a warning letter. It is the plant which was which had official action indicated from the US FDA. When the inspection came last month during the peak corona period time, they conducted an inspection for almost 40 days. They did a very detailed inspection on that plant, and they have given an official warning letter to that, which is a negative for that. The only thing is that it's a very small plant. It don't contribute much to the overall revenue, but still company has to do a huge homework for cleaning, for to get a clean image from the FDA. Because of that news, it fell by 6%. Power grid and all can safely fold. Company will give good dividend, and they have announced some bonus also, and pretty late did well. So overall, our portfolio has done slightly worse, mainly because of the Rallies India and Lupin. Rallies India, you can safely fold. Lupin, we are closely watching it. Any development comes, we will update you whether to hold it or to exit it. We will update you. Thanks.